What if the biggest financial revolution of our lifetime, the very thing meant to free us from banks and governments, was actually the scam of the century? Welcome back to BrainFuel Reads. This is part of our What If series, where we break down potential scenarios that could shake up your wallet, your world, and your future. And today we're tackling one of the most hyped and most controversial topics in modern finance: cryptocurrency. Whether you love it, hate it, or don't fully get it, Bitcoin and crypto are impossible to ignore. Some say they're the future of money. Others call them nothing more than digital snake oil. But to be honest, what actually is cryptocurrency? Why did it explode in popularity? What do governments, banks, and regulators really think? Could it all be a giant scam? And most importantly, should you be putting your money in it? Grab a snack, sit back, and let's break this down. By the end of this video, you'll be armed with a perspective that cuts through all the noise, both the hype and the fear. Let's get started. First, it's hard to really get something if you skip over where it started. Let's rewind and take it back to 2009. The world had just been rocked by the global financial crisis. People had lost their homes, their jobs, their savings. Trust in big banks was at an all-time low. I mean, who could you really trust at that point? And then, out of the shadows came this mysterious figure, Satoshi Nakamoto. To this day, we don't know who they are. A genius coder? A group of hackers? Or even a government agency? Nobody knows. But Nakamoto published a white paper that introduced Bitcoin, calling it a peer-to-peer electronic cash system. The idea? A money system free from banks, without reliance on government printing presses. Just people like you and me sending value directly to each other online, all thanks to a groundbreaking technology called blockchain. Now hold on tight, because this is where things can get a bit complex. Blockchain might sound daunting, but it's way simpler than you think. Imagine you and your friends all keep a notebook. Every time someone buys or sells something, you all write it down, at the same time, in your notebooks. If I give you 1 Bitcoin, everyone in the group writes down, "I gave you 1 Bitcoin." And once it's written, guess what? Nobody can erase it. That's what the blockchain is. A giant public notebook shared across thousands of computers worldwide. Each page of the notebook is a block, and once a page is full, it gets sealed and linked to the previous one. That's why it's called a chain of blocks. So why is this powerful? Firstly, it's transparent. Anyone can check the transactions. Secondly, it's secure. Thousands of computers agree on the record. You can't just hack one and call it a day. And thirdly, it's decentralized, which literally means that no one person, bank, or government owns the notebook. And here's the kicker. It solves a huge problem with digital money, the double spending problem. Normally, if you send a digital file, you could copy-paste it endlessly. But blockchain ensures that once you spend a coin, that transaction is locked in forever. No copy-paste cheating. Of course, transactions don't just appear out of nowhere. They're verified through a process called mining. Basically, powerful computers race to solve complex puzzles, and whoever cracks it first adds a new block to the chain, plus they earn some freshly minted coins as a reward. Pretty cool, right? The catch is that mining burns through massive amounts of electricity. At its peak, Bitcoin's network has consumed as much energy as entire small countries. That's why both environmentalists and governments are raising big concerns. But we'll spare that discussion for another video. For now, let's move on to the next big question. Why did Bitcoin and other cryptocurrencies skyrocket in popularity? Well, there are 3 main reasons. First, trust issues with traditional finance. After the 2008 crash, people wanted money that couldn't be manipulated by greedy banks or politicians. Bitcoin came along looking like pure financial freedom. Second, let's be real. There's the whole speculation thing. Most people didn't jump in because they were die-hard fans of decentralization. They got in because they heard stories of folks turning a couple bucks into millions. Like that guy who bought 2 pizzas for 10,000 Bitcoins. Today, those coins would be worth hundreds of millions. Stories like that spread faster than wildfire. And third, the culture. Crypto wasn't just money. It became a movement. It stood for rebellion, freedom, and cutting-edge innovation. Suddenly, everybody, your Uber driver, your cousin, even celebrities, was talking about it. And pretty soon, it wasn't just Bitcoin anymore. Before you knew it, thousands of cryptocurrencies had popped up. Ethereum, Dogecoin, Solana, you name it. But let's remember, popularity doesn't automatically mean legitimacy. Here's where things get really interesting. Let's see what the big players, our governments, really think about all this. Spoiler alert, it's pretty complicated. Governments around the world have mixed feelings about crypto. On one hand, they see innovation. On the other hand, there's a whole bunch of risks: fraud, money laundering, tax evasion, and even potential links to terrorism. For instance, in the US, regulators like the SEC and CFTC are constantly debating a simple question: is crypto a currency or a security? And that one label makes a huge difference, because it decides how crypto gets taxed and how it's allowed to trade. In China, crypto trading is outright banned. The government cracked down, saying it was destabilizing and fueled illegal activities. Meanwhile, El Salvador went the other direction. It made Bitcoin legal tender in 2021. That means you can use Bitcoin to buy your morning coffee there, though not everyone's thrilled about it. Internationally, groups like the Financial Action Task Force, FATF, are setting global standards for monitoring crypto to prevent crime. Central banks from Europe to Australia warn people about volatility and scams. And here's the kicker. Many governments don't want to ban crypto outright, but they definitely don't want it replacing their own money either. That's why so many are now experimenting with CBDCs, central bank digital currencies. Think of it as their own version of digital cash, but with full government control. So the tension is pretty clear. To governments, crypto is both an opportunity and a threat at the same time. That's the government side. But what about banks and big financial institutions? Funny enough, banks and crypto sound like natural enemies, right? After all, Bitcoin was literally created to take power away from them. But surprisingly, Wall Street is starting to embrace crypto. Major players like JP Morgan, Goldman Sachs, and Fidelity are already offering crypto products, and even hedge funds and pension funds are pouring in billions. Why? Simple. Clients are asking for it, and the money is just too good to ignore. But here's the catch. These same institutions keep warning their clients about the risks: wild price swings, changing regulations, and of course, scams. So it's really a love-hate relationship. They want the profits, but they're bracing for the crash. As this landscape keeps evolving, one thing's clear. The dance between traditional finance and the crypto world is just getting started, and it's shaping up to be one wild ride. Moving on, let's talk about a real issue in the crypto world: scams. Seriously, they're everywhere. Whether it's rug pulls, Ponzi schemes, or shady exchanges. If you can imagine a scam, it's probably out there. Take FTX, for example. It was once one of the biggest players in the crypto game, but in 2022, it came crashing down almost overnight. Just like that, billions of dollars vanished, and its founder, who was hailed as the future of finance, ended up facing serious fraud charges. It was a wild ride for sure, but not exactly the fairy tale many were hoping for. The truth is, the crypto world is kind of a lawless land right now. With so little regulation, bad actors can run free, and it's usually everyday investors, people like you and me, who pay the price. This is why you'll find critics, including some pretty heavy-hitting economists and central bankers, keep warning us that Bitcoin and its buddies might not be about building wealth for everyone after all. Instead, it could be more about funneling money from the many to just a few. Here's another fascinating angle: crypto, currency, and global trade. Have you ever thought about how cryptocurrency operates outside the realm of traditional governments? That's a double-edged sword. On one hand, some countries are pretty nervous that crypto could undermine their grip on money. Just imagine if people started favoring Bitcoin over the US dollar. It could really shake up the whole global financial scene. But here's the flip side. In places where economies are unstable, crypto can be a real game changer. In countries grappling with hyperinflation or unreliable banking systems, Bitcoin often becomes a lifeline. That's where it's gaining traction, especially in parts of Africa and Latin America where people are looking for more stability. It's interesting to see how this digital currency is making waves and offering real value to those in need. So we often hear about blockchain in the context of money and cryptocurrencies, right? But let's not forget that it's got so much more to offer. Think about it. This technology is being used in supply chains to track goods all the way from factories to store shelves. Pretty cool, isn't it? And in healthcare, it's making waves by securely storing patient data, which is huge for privacy and safety. Oh, and let's talk about voting systems. Blockchain can create tamper-proof election records, helping ensure that our democratic processes are fair and secure. So even if Bitcoin were to take a nosedive tomorrow, blockchain itself isn't going anywhere. Finally, let's dive into the big question of the day. Is Bitcoin and crypto in general really the scam of the century? Honestly, the answer is a bit of a roller coaster. Crypto isn't just one simple thing. It's a mix of technology, a financial system, and even a cultural movement. Now let's face it, there are definitely scams out there. You can't scroll through social media without coming across some sketchy schemes, right? And yes, the crypto market is like a wild ride at an amusement park. It's super volatile. There are real risks for investors and even for economies out there, no doubt about that. But calling crypto a scam in and of itself, that's not quite right. Think of it more like the Wild West of money. Sure, there's danger, and some folks getting burnt, but there's also a lot of opportunity and even some amazing success stories. Therefore, experts usually suggest keeping crypto as just a small part of your overall investment portfolio. So, if you're curious and want to explore, just make sure you do it wisely. To sum up, is Bitcoin the groundbreaking financial revolution of our time, or is it just a clever scam? Only time will tell. But your perspective today might shape how you face the money of tomorrow. I'd really love to hear your thoughts in the comments. And if you enjoyed this deep dive, don't forget to give us a thumbs up, subscribe, and hit that bell so you won't miss the next episode in our What If series. Here at BrainFuel Reads, we're all about going beyond the headlines. We want to spark those big conversations that shape our world. So let's keep the dialogue going. And as always, keep your brain fueled.